Uh, shall I start, sir?
Yes.
Okay. A very good evening and very warm welcome to all of you in this 9-day series, Tax Gyan Ki Ganga on New Income Tax Act 2025. As we know, in this series, we are learning and understanding the key provisions and substantial changes made in the Income Tax Act 2025, which will be implemented and effective from 1st April 2026, or we can say tax year 2026-27.
आ,
Four wonderful
दिव्यांशु जी एक सेकंड ये स्टॉप शेयरिंग कर दीजिए अभी. यस. परफेक्ट. यस. ओके.
Four wonderful sessions have already been conducted by our eminent speakers covering different aspects and area. And today is the fifth day. And the fifth day and fifth session of this Tax Gyan Ki Ganga Navratra. And the topic of our session is analysis on assessment, reassessment, and appeal, which will be taken up by the our eminent and esteemed speaker, advocate and chartered accountant, Shri Divyanshu Agarwal ji. Very well, warm welcome, Divyanshu Agarwal, sir. Before I formally introduce Shri Divyanshu Agarwal to our participants, I would like to mention that I was very keenly and eagerly waiting for this session because of obvious reason. We all know that Income Tax Act 2025 was introduced with the goal that the language would be simplified, and the ultimate goal of the act was to reduce the litigation. So since we are discussing the litigation aspect of Income Tax Act 2025, so it will be very interesting to know that how far the litigation is going to be reduced by implementation of this new Act 2025. And we have also seen that very constant and frequent changes made in the litigation provisions, especially the income tax escaping assessment provision or search provisions in the old Act 1961 by the Finance Act 2021 till Finance Act 2024. Many disputes and controversy arose. Several writs were filed, like validity on notice issued under Section 148 under old regime, when the new or substituted law was already taken place and came into effect post 1st 4 2021. Matter reached to different high courts and writs. Different high court had given different verdict. Ultimately, matter reached to the Supreme Court. Before the Supreme Court could give its verdict, in its judgment, Ashish Agarwal on 4th May 2022, we already knew that further amendments were introduced in the Act, and amendments will keep going on till Finance Act 2024. Then, before we could grasp the changes or amendment made in the old Act, the new Income Tax Act or new Income Tax Bill came in August 2025. So, with this all changes, and we have also seen that budget 2026 has already come up, and in the budget 2026 there are retrospective amendment in assessment provisions. A key controversy which was arising from the decision of Honorable Supreme Court in case of self-drilling. There was a DIN aspect and there was a Jiao Fao controversy. With this all retrospective amendments and with this new act, new Income Tax Act 2025, it is very important and very careful to understand today's session. So before wasting any time, I would like to formally introduce our eminent speaker, Shri Divyanshu Agarwal ji. Mr. Divyanshu Agarwal ji is an advocate with over 2 decades of professional experience in complex tax, regulatory, and constitutional litigation. He regularly appears before the Honorable Supreme Court, Delhi High Court, Allahabad High Court, and various other high courts across the country, as well as appellate and statutory forums, including ITAT, CESTAT, NCLT, PMLA tribunal. His core practice areas include direct, indirect taxation, international taxation, transfer pricing, GST, custom law, legacy and direct tax, leasing disputes, corporate and solvency matter, Binami proceeding, allied, regulatory litigation. He regularly handles matters involving high value assessment, reassessment proceeding, cross-border structuring issues, treaty interpretation, and complex jurisdictional challenges. Mr. Agarwal is also a fellow member of Institute of Chartered Accountants of India, which enables him to combine courtroom advocacy with deep understanding of accounting standards, financial statements, valuation principles, regulatory compliance frameworks. His Dual qualification allows him to approach litigation from commercial and financial perspective. Prior to commencing independent practice, he was associated with leading global professional services firms including E&Y, PwC, and Deloitte, where he gained extensive exposure to multinational tax structures, corporate advisory engagement, and cross-border transactions. Over the years, he has worked closely with distinguished learned senior advocates before the Honorable Supreme Court of India, various high courts, assisting in complex constitutional and tax litigation of significant importance. He has represented clients across diverse industries, including real estate, infrastructure, FMCG, defense, logistics, financial services, technology, artificial intelligence, data center, manufacturing, etc. His clientele include multinational corporation, Indian listed and unlisted company, private equity funds, for entities, startup, trust, high net worth individuals, etc. In addition to the litigation practice, he regularly conducts lectures and technical sessions for professional bodies, including various branches of ICI, sharing practical insights on involving tax jurisprudence, reassessment proceedings, GST controversies, and regulatory developments. He's the founder of Divyanshu Agarwal Law Office. He also has professional membership of Supreme Court Bar Association, Delhi High Court Bar Association. He is enrolled with Bar Council of Delhi. Have live membership of ITT Bar Association. Is fellow member of ICI. Has life membership of Bombay Chartered Accountant Societies. With this high profile and overly achieved profile, I again welcome Divyanshu sir on behalf of CASA team and all our participants. Now, I would like Divyanshu Agarwal sir to take up this very intriguing and very interesting session, which will clarify the litigation aspect and the
Bharti
changes.
ji,
Yes.
Bharti ji, sorry to interrupt. Just before you hand over to Divyanshu ji for his technical deliberation, just would request founder of CASA CA Sumit Garg ji to give a brief about the CASA to our, क्योंकि कोई ना कोई हमारे न्यू ऑडियंस जुड़ती है हमसे तो उनको भी पता हो तो जस्ट लेकिन आप
Definitely.
1 से 2 मिनट में कीजिएगा सुमित जी.
No. Thank you, Asha ji. And I will not take much time. And wonderful introduction, Bharti ji. My good
Thank you.
friend Divyanshu Agarwal ji, a leading advocate, chartered accountant from Delhi. Divyanshu ji, welcome to you and thank you for giving your precious time for the cause of CASA and for this learning series. One thing I would like to highlight before inviting him that we have contested the case for income tax audit extension with the help of advocate CA Divyanshu Agarwal ji, who was my counselor, and we all together contested a case in Delhi High Court for extension, and we succeeded. So it's a proud moment that we are together. We are available for the profession. So Divyanshu ji, with the core of my heart, I really thankful to you for always supporting our professional activities and giving your precious time for this noble profession. So without taking much of time, I straight away request Divyanshu ji for this important topic to take forward for this discussion. Over to you, sir.
Thank you. Thank you, Bharti ji, Sumit ji, Asha ji. Good evening, everyone. At the outset, I would like to sincerely thank CASA for organizing this insightful 9-day webinar series on the new Income Tax Act 2025. In a time when tax jurisprudence is evolving rapidly, such structured discussions and just useful, they are necessary. I truly appreciate the effort taken to bring together professionals and experts, domain experts on one platform to decode the significant legislative shift. It is a privilege to be part of this initiative. Thank you so much. Thank you, everybody. Now, let's come to our topic. Today is the 5th session of this series. The topic for today is assessment, reassessment, and appeal. A very important topic, especially for all chartered accountants, because the day and day night we dealing with assessments, earlier physical assessments, now faceless assessments. Of course, yes, international tax, transfer pricing, GAR matters, as well as search matters, one-to-one hearing in the assessment, rest in faceless. So what we cover today, first need to understand. We'll touch in return of income, because from returns we move to assessment. From assessment two types. One is non-search, another is search and block assessments. And next to the appeals and dispute resolution, which is the agenda for today. I'll try to cover everything. I'll try to give a background. I'll try to cover everything in a slot of 120 minutes. So PAN. So new section, this is part of chapter 15 part A of the new Income Tax Act 2025. So section 262 is a permanent account number PAN. Erstwhile provision 1961, as everybody is aware about existing law. Existing law, the sections is 139A and 139AA. New section is 262. Mandatory PAN. Required if total income exceeds exemption limit. We are aware. Business turnover likely exceed 5 lakh. Or financial transaction greater than or equal to 2.5 lakh in case of resident non-individual, which we all are aware. These are the provisions intact in the new act also, which was in the existing act. Aadhaar linkage, it's already there. The section is there in the current existing Income Tax Act. Failure to intimate Aadhaar renders PAN inoperative, as we all are aware. And now Aadhaar may be quoted in lieu of PAN wherever allotted. A person holding a PAN cannot apply for another. There are a lot of litigations going pan-India and high courts because of the duplication of the PAN. There are a lot of litigations going, but duplicate PAN is a compliance risk. As a CA, it is equally important to understand. We know our existing client. In case if some new client comes, I believe as a CA, it is equally important for us to do the know your client concept also, which everybody is doing, know your customer. We need to know our client. It is important to understand whether they are holding another PAN, two PANs. If yes, then we need to give them a right advisory that holding two PAN is duplicate PAN is not legal. Now, section 263 talks about who must file a return. Existing section in 1961 is 139, 139D. In the later part of this presentation, we have given a comparative sections also so that it would be easier for everybody to understand. I'll share this presentation slides with Sumitji also so that he can share it with everybody later on. 139, 139D, 194P of the 1961 Act, parallel sections. Company and firm, mandatory. Whether you have income, loss, nil, mandatory. Current, it's there in the existing law also. Business trust or investment fund, mandatory to file ITR. Now, these days, government is focusing a lot on foreign assets and signing authority in foreign bank. Every day you're seeing in the newspaper. So it is mandatory if you have a foreign assets, and take an example, a senior citizen aged 75 years of age, having a foreign assets, no income, nothing, but still it is mandatory for him or her to file return if he has a foreign asset, he or she, or a signing authority in a foreign bank account. Individuals with loss to carry forward, it is important to file to preserve within due date to preserve your losses. Otherwise, you're not supposed to carry forward your losses. And specified senior citizen, which is given in section 393. Now, 263 categorically gives a tabular format in the new Income Tax Act about the due dates of filing your returns. So transfer pricing audit, you know that obviously 1 month extra we always get in transfer pricing. So transfer pricing audit timeline given is 30th November. Company other than wherein the transfer pricing is not coming into picture is 31st October. Accounts audited under any law 31st October. Partner of audited firm 31st October, and any other assessee 31st July. So this was the due date, was the controversy this year when we have filed a writ petition in the name of Sumit Garg before Honorable Delhi High Court. That was the point, because I just wanted to connect existing things so that it is easier for you to understand. So government has actually extended the time from 31st July to 15th of September. And for audit cases, the due date was 30th September, but there was no direction from the CBDT side on that. So quickly, we have filed a writ petition before Honorable Delhi High Court requesting for an extension of time limitation. Because of non-audit cases, the chartered accountants who have not, the chartered accountant doesn't get the time to file their returns, the client returns. So fortunately, because of that writ petition and because of the pressure, and the CBDT has come out with a press release and the notification of extension of time limitation. Now, for everybody, it is very important. I have created a litigation risk angle also in this thing. Any due date you missed, it is clear-cut case of a disallow of loss carry forward. So please ensure that there is no missing of a due date. We have to be particularly clear and we have to inform our client in advance so that they will not miss any due date of filing an ITR. The government is focusing so much on the updated returns. In Finance Act 2025, last year budget, they have extended the time limitation of filing of updated returns from 24 months to 48 months. The idea was to improve the compliance from the assessee perspective. So in case if you find that some undisclosed income you have observed, it is better you file your ITR as an updated ITR. This updated ITR concept is given in Section 263, subsection 6 of the new Income Tax Act. This was parallel to 139, subsection 80. So if you're filing your updated returns within a slot of 0 to 12 months, 25% of the aggregate tax and interest you're supposed to pay, 12 to 24 months, 50% of the aggregate tax and interest, 24 to 36 months, 60% of the aggregate tax and interest, and 36 to 48 months, 70% of the aggregate tax and interest. So the idea was how much you are proactive in taking a decision. So as a CA, it is equally important for us to do a strategic call with a client when we feel that it is important for them to file an updated return. So we have to inform the client that the more you delay in taking a decision, the more you're supposed to pay the taxes. That's the idea. If you are quick in filing updated returns, obviously the lesser percentage of tax, and delay, higher percentage of tax. Updated return window is 48 months from earlier 24 months. But income tax escalates from 25% to 70%, depending on when the return is filed. So this is a significant litigation risk management for CAs advising client with an undisclosed income. So please, these are the tricky points which we have created for you to understand, to educate your clients. Now question comes, when we cannot file my updated returns. So these provisions are given under subsection C and D of 263 subsection 6. Bars on not filing on filing updated returns. So those cases wherein the assessment is pending or completed. No updated returns if assessment, reassessment or revision proceedings are pending or completed for that year. No updated returns allowed. Search or survey initiated. The bar is applicable for the year of search or survey and all preceding years covered by the search. So block of 6-year period, search year plus 6-year period is covered. You're not supposed to, as per the law, not supposed to file your updated returns. Now you have an international transaction, some information is coming. Any information received under treaty from a foreign exchange information coming from outside India has been communicated to the assessee prior to filing, updated return is barred. Yes, if you have a presumption that something is going to come, file your updated returns. Until is on the date of filing, something is not on record. And prosecution. If prosecution proceedings initiated under chapter 22, it also bars the updated return for that year. So CBDT is focusing too much on the updated returns. It's a good strategic tool for us to advise our client. In case if we find something, then it is always better and advisable to file your updated returns within time. Self-assessment and tax on updated returns. Section 266 talks about self-assessment. Important. Tax, interest, and fee must be paid before filing the return. Payment is now how they adjust the payment. Payment is adjusted first against fee, then interest, and then finally against tax. So any shortfall that renders assessee a defaulter. So this is important. First fee, then interest, then tax. 267 talks about updated return tax. Additional income tax must be paid along with tax, interest, and fee before filing. So Before filing, you're supposed to pay all the taxes. Interest under Section 423 computed on declared income, reduced by advance tax, TDS, and credits. Now, an advice for CAs is please verify all TDS credits, all advance tax, and foreign tax relief before computing self-assessment liability. So any error, it triggers demand notice under Section 289. Any error, it triggers demand notice. Now, coming to assessment. Assessment chapter is chapter 16, part A. So this is the same 142 which you receive along with 143.2 notice in case it is a regular scrutiny assessment, or in case if it is reassessment you receive after 148. Once they issue you 148 notice in the current law, then yes, 142.1 is a questionnaire they give you and the questions they give you to reply. So new section is 268. AO may require returns, accounts, documents, or a statement of all assets and liabilities. As everybody is well versed with 142 notice, same thing is 268. So prior approval of joint commissioner needed for asset liability statement. Same thing in the existing law, same law intact, the special audit direction which is there in the current 1961 Act. AO may direct audit by accountant or inventory valuation by cost accountant with prior approval of PCIT or CIT. Expenses paid by central government and the maximum period allowed is 6 months. Hearing requirement. Now, this is a trigger point. Hearing is very important. Anything passed against you, addition made against you without hearing is a clear cut case of violation of principle of natural justice. So Constitution has given us a power wherein it is mandatory for the executive to give us an opportunity whenever they wanted to take a position against us. So assessee must be given opportunity to be heard on material gathered through inquiry or special audit before it is used in assessment. In case if they use without giving us an opportunity, that's a good ground of violation of principle of natural justice. Except 271 best judgment. We'll come to 271 and discuss. 271 is same, which we know as 144 best judgment assessment ex parte order. Now comes valuation officer reference. So the current section is 142A. In the new Income Tax Act, the section is 269. When AO can refer for any assessment or reassessment, whether or not accounts are correct, valuation officer may enter land building within 2 days notice. Report must be sent within 6 months from end of the month of reference. Same provision intact in the new law also. AO must give assessee opportunity to be heard on the report before use. Now, what is the litigation risk? This is a trigger point advisory note. Valuation disputes are a major source of appeals. If you see a lot of appeals which you are filing, valuation dispute is one of the main ground of challenge. Please ensure fair market value documentation is robust before assessment. Always ensure that you must have a proper documentation of fair market value and try to submit it at the time of the assessment, which helps in making your case strong. Now comes processing of return, a very famous section 143.1, which is an intimation in the current law. The new section is 270 subsection 1. Compute income, adjust for errors, claims, disallowances. You compute liability, calculate tax, interest and fee, and you issue intimation. But intimation must be sent within 9 months from end of the financial year in which return is filed. Same provision 143.1 is enacted in the new law also. Where no adjustment is made, no sum is payable or refundable, acknowledgement itself is deemed the intimation. As everybody is aware, 143.1 is also an appealable order. Same thing for 270, intimation is an appealable order. In case if some error is there, you can file a rectification, you can file an appeal. Both the tool is open for you. Now, scrutiny assessment, which we everybody do. Scrutiny assessment starts once you, after filing your returns, they issue you 143 subsection 2 notice in the current law. And then parallelly, they'll pass an order under section 143 subsection 3, a normal scrutiny assessment. Can be limited or can be comprehensive scrutiny. New section is 270, subsection 8 and subsection 10. Same process, same procedures, everything is same which is there in the current existing law. Important is at the time of assessment, I'll again request everyone, please see the questions which you have, which the officer is giving you. Try to address all the questions properly. Try to attach all the materials and information which you have properly, because I have seen those cases wherein at the faceless assessment stage itself, the officer drops the assessment. So what is more important is how you draft your submissions, how you draft your reply. Every questions, even if you wanted to file a part reply, please ensure that you write that these questions has been answered, this, and these questions will answer it within part reply. These questions will reply in maybe a 3 days or 4 days or a week time. This is important. And attach all materials properly, synchronize it, properly make a paper book. Please do it like this. Now, notice issuance. AO serves notice if income understated. Same thing. Notice must be served. Now, notice must be served within 3 months from end of financial in which return is filed. So, in case if you file your return by 31st July, then 143(2) notice timeline is 30th June. If 31st July of the next year, that is the time limitation. So in case if they issue you this jury, and please understand 143 subsection 2 is a jurisdictional notice. Again, I'm repeating, it's a jurisdictional notice. If you file your returns, be it any case, if you file your return, normal return, if you file after 148 return, if you file after search notice, wherein the requirement is to file your return, everywhere, whenever you file your return, it is mandatory to issue 143 subsection 2 notice. In case the officer is not issuing 143T notice, then the proceeding becomes null and void, illegal. There are a lot of high court judgments on the same, that it is a statutory notice and they're supposed to comply with this. So please ensure, in case if you find this thing is missing after and time limitation has been barred, ensure that you take these grounds in your submission at the time when you are participating in the proceeding before an officer. This is very important. Hearing. Assessee produces evidence, all AO considers all relevant materials and try to prepare in a form of paper book. Give them an index, page numbering and everything, so that it would be easier for an officer to understand which page you are referring, which section you are referring. And that helps you, because there is a high possibility that the officer drops your case also at this stage itself. Except some tricky issues like penny stock or some other issues wherein the issue is complicated, leave apart those cases. But yes, other cases, there is a high chances that the officer drops your case. Best judgment assessment, which is 144. New section is 271. When we are not filing our original return, belated return, revised return, or we are not complying with the notice issued of filing a return or any document we are not submitting, and we are not participating in the proceeding. Why participating? Maybe they are putting it on the portal. They have not issued you a notice on an email, or they have not sent you a message. You might missed it. That is also one of the reason of passing a best judgment assessment. But one thing is important. Please ensure show cause notice is mandatory before best judgment assessment. That's a very strong litigation point. In case if you find 144 order, later on becomes 271 order, but wherein the show cause notice is missing, that is a clear-cut case of violation of principle of natural justice. Good case wherein you take a decision whether you want, after passing an order, whether you wanted to challenge those points before writ. I'm not saying it is a case of a writ, but you need to evaluate whether it is a case fit for writ, filing a writ, or under Article 226 before the jurisdictional high court, or we move and file an appeal before first appeal and taking this ground. This is important. Exceptional cases is in case the notice has already been issued to you complying, then obviously there is no separate show cause notice needed if they have automatically issued you a notice wherein they have covered all the queries and you have not addressed those queries or not participated in the proceedings. And whatever the information and the relevant material the AO has to, based on those material, they have to pass a best judgment assessment. Now what is the litigation risk? Now, these are the boxes which is important for everybody. What is litigation risk? Every day we are finding these type of things coming. Best judgment assessments are routinely challenged. If you see, many people are filing challenging the best judgment assessment. What is the precautions? As soon as you have an order in your hand, what the course of action? First, you need to see whether you have a 30 days time limitation left or not. If yes, then file first appeal. Along with the first appeal, you need to file all those additional evidences also. Reason, because you have not participated in officer before officer. So additional evidence filing is mandatory before first appeal. Or else, whether you wanted to move in a writ, but that's a strategic call. Again, I'm saying it is not a window which is open for everybody to file writ. It is a strategic call which you have to understand the case, consult with your lawyer, and then understand whether it is a case fit for filing a writ before High Court or is it a case of filing an appeal before the first appeal. Make sure to ensure clients respond to all notices within time to avoid this route. And the only option available with us is to regularly, to everyday basis, either we must have, like take an example, everybody has a team members in the offices. So if there are 5 team members, everybody mark 10 clients. So every person actually ensures to check the portal every day, whether the notices has been there or not, whether I have missed that notice or not. It is important. Faceless assessment. Other than if we are not an eligible SSE, other than international taxes cases, other than transfer pricing cases, other than GAR matters, other than search matters, every case comes under faceless assessment. The current law is 144B. New provision, new section is section 273. Now, we have 4 units. One is a National Faceless Assessment Center. Second is assessment unit. Third is a verification unit. And fourth is a review unit. So National Faceless Assessment Center is in the front circle, centralized hub. This is the center which assigns cases, serves notices, forward SSE responses to assessment notice units. Almost similar to 144B, which we all are aware. What does assessment unit do? It whatever information you supply, National Faceless Assessment Center forwarded it to the assessment unit. So they analyze material, they identify issues, they determine whether variations prejudicial to assessee or not, and then they passes an order. Then what is the role of a verification unit? So if we find that based on the material, some verification is important, then they'll conduct inquiry. Then they refer it to the verification team unit, and verification unit conducts inquiry, cross-verify, examination of books and witnesses. They examine all those, and then they may operate outside electronic mode in a specified circumstances, and depends on the materialistic issues, depend on the gravity of the issue. The NFAC and the assessment unit requests the NFAC to assign it to the verification unit. And then comes the review unit, fourth one. What does review unit do? A review unit reviews proposed variations, checks evidences on record whether whatever the addition the assessment unit is proposing is correct or not, whether the legal and factual issues are correct or not, additional disallowances before finalization. So take an example. Issues on corporate tax, issues on transfer pricing, and issues on international tax. So we have a team. So they have a team of people who are expert in international tax, expert in transfer pricing or domestic tax. So they'll refer those proposed addition to different units internally, and based on their technical input, they'll decide whether this proposed addition is technically correct or not. In case yes, they give us a go. They give them a report. In case no, then they'll come out with a variation. What is the variation? What is the correct position? This all happens internally. Now the procedural rules comes. What is the communication protocol in case of faceless assessment? All communications between units and with assessee, everything electronic through NFAC. Exception is only the verification units. When verification unit inquiries in board specified circumstances, there are certain specified circumstances wherein they assign verification unit to do inquiries outside this electronic mode. Registered account is your e-filing, your client e-filing account on designated portal. Certain cases are there wherein based from from faceless, they transfer the cases to the jurisdictional AO. So PCIT or PDGIT in charge of NFAC may transfer cases to jurisdictional AO at any stage with board's prior approval. Wherever they find that transfer to the jurisdictional AO is critical, they transfer it. In case of some special audit is required, they'll forward it to the jurisdictional PCIT and CIT. So, or penalty proceeding may also be initiated by assessment unit. Certain cases are there. Now, what is a risk alert for us? We miss electronic communications, which are the major reasons of ex parte faceless orders. You find many of the orders which is ex parte under 144 because of you missed electronic communication, you being not aware that some notices has been issued. We have not checked the portal. Obviously, we are not supposed to check the portal. They're supposed to send us an email or a message, but we have not checked the portal. And because of that, we missed that notice, missed that deadline, and the ex parte faceless order has been passed. So what is important for us is to monitor the e-filing portal activity for all clients. We need to check whether any tool is available or something is there when whenever any notices get uploaded on the portal, whether we'll get an alert or not. We need to check in the market whether something is there or not. So from faceless, now one very important, I'm not sure how many of our participants are practicing in international tax, but yes, Section 274 is parallel to Section 144 BA, which talks about GAR cases, General Anti-Avoidance Rule cases. So what happened during the assessment proceedings when AO finds something impermissible transaction, avoidable transaction, then they refer the cases to PCIT or CIT under GAR. Then it is important for PCIT and CIT to issue notice to the assessee and give them 60 days time period to file a detailed objection. So in case if the assessee not giving a detailed objection in a time of 60 days, then they'll pass an order. That order that's a direction, in fact, not appealable direction. That direction the AO incorporated in its own order and passed a final order. But the situation changes. In case if we file an objection against that notice, then they refer that matter to a panel of 3 members, wherein either the Honorable High Court sitting judge or a former judges. One member is a High Court former judge or a sitting judge, or a senior IRS officer, maybe of the rank of PCIT or CIT, or anybody into academic expert in direct taxes can become a 3-member panel. And then they'll see the objection, they'll give you an opportunity for hearing, and then they'll decide whether it is an impermissible transaction or not an impermissible transaction. In case if they find that the transaction is impermissible transaction, they issue binding direction within 6 months. Important is directions are binding on assessee and revenue. And this is not an appealable direction. Again, I'm repeating, no appeal lies against approving panel direction. Why? Because this direction get incorporated into the order of the assessing officer. So now, if this direction is not appealable, that means we need to see whether we need to invoke a writ jurisdiction before jurisdictional Honorable High Court in that situation, because it's not an appealable order. Many things are important. What material was before assessing officer? These are tricky points wherein these are red flags we need to see. Wherein the assessing officer, what material the has before assessing officer, that is one of the reasons why the person is referring it to PCIT or CIT. Whether the notice issued by the PCIT, CIT is correct or not, whether all these information they have requested or not, whether the time limitation given is 60 days or less than 60 days. So then if we file an objection, so not in case if we not file an objection, whether they are passing an order after 60 days or within 60 days. Number two, in case we file an objection where they are properly referring it to the panel or not. All these statutory mandate we have to check. And if we find that everything is cross-checked, it's perfectly done, then obviously it's not a case of a writ. Then we'll wait for the order and then we'll file an appeal. But in case if you find some error is there, then you need to take a strategic call with your lawyer and discuss whether should you file a writ petition in that situation or not. That is a strategic discussion which you have to do at that time. Everybody is aware about dispute resolution panel. I believe many of our participants have already represented the case before DRP also. So DRP concept was introduced in 2009. We can say this is a fast track. This is in fact a fast track way of reaching to the honorable tribunal in the case of transfer pricing matters. So one remedy, so very interestingly, this is in current section is 144C, new section is 275. So what does DRP do? So if you are an eligible SSE means if you come into transfer pricing, or if you are a non-resident, or if you are a foreign company having an international transactions, then it is mandatory for an assessing officer to pass a draft assessment order, not final assessment order. To pass a draft assessment order, give you 30 days time limitation, 30 days time to file an objection. If you are not satisfied with that order, so in case if you not file your objection within 30 days, after the expiry of 30 days, they'll pass a final assessment order. Number one, in case if you file an objection within the slot of 30 days, then what will happen? You intimate to the officer and then the matter goes to the DRP. Then the DRP has 9 months time to dispose of, to pass a direction. The DRP, then you have a full right to present additional evidences which you have not taken before officer. You will represent, you file an additional ground, additional evidences, everything before dispute resolution panel. So after filing all these paperwork, document submission, you represent and then they pass in direction. Again, I'm saying DRP direction is not appealable, just like GAR. But yes, whatever direction comes, the assessing officer has 1 month time based on that after the date from which the directions received to pass a final assessment order. So after passing a final assessment order, that order is a fit order wherein you go directly before honorable tribunal and file an appeal. Now, two options there for you. One is you're not challenging the draft assessment order. You're not filing an objection. They pass an order. That order is you go and that order you file an appeal against that order before first appeal, which is CIT appeal. Or number one. Number two, in case you file an objection, you instead of CIT appeal, you go to DRP. So you have jumped from one. That's the idea of DRP, is to be, because these are high stakes matters, so that you can jump from first appeal level to and move directly to the honorable tribunal level. This is DRP concepts. And now the trigger points. So question comes, Mr. Agarwal, how we see and file a writ petition before Honorable High Court. Now certain tricky points, certain checklists for everybody. Number one, in case if the officer passes a final order without giving a draft assessment order, that is a fit case of challenging filing a writ before Honorable Jurisdictional High Court. Reason, statute says mandatory to pass a draft order. And in spite of that, if he passes a final assessment order, get it challenged before Honorable High Court under writ and get it quashed. So, and give it, let's take the direction that go and pass a final draft assessment order. Number one. Number two, if certain limitations are there or during the proceeding before DR. Number two litigation is within 30 days, you filed an objection, but then what happened if I not intimated to the officer? Some judgment says that in case if you're not intimated to the officer and they passed a final assessment order, then you please go and file a writ before the Jurisdictional High Court and get it quashed, because the DRP matter is already pending. That's the statutory mandate. These are the certain orders which is already there and wherein the litigants are going and exploring a writ jurisdiction before Honorable Jurisdictional High Court. Now question comes, who are an eligible SSE? These are eligible SSE wherein it is mandatory for an officer to pass a draft order. Any person where variation arises from TP, so if it is a case of transfer pricing, draft order. Any non-resident, draft order. Any foreign company, draft order. No scope for final order. So who are excluded from DRP? Persons covered under block assessments excluded from DRP. DRP is not route for you. Cases where AO has prior PCIT, CIT approval under GAR. Not. DRP is not for you in GAR because they have a proper panel. Proceedings under Chapter 14B block assessment, DRP is not for you. Now, very important income scaping assessment.
May I interrupt you, sir, for a moment? Sir,
Yeah, please.
there are certain queries relating to previous provisions. If we can take these queries.
We'll take these queries after the session.
Okay, not a fine, not a problem, sir.
Yeah. Income scaping assessment. So as Bharti ji has in the initial has discussed certain things about income scaping assessment. So coming to the income scaping assessment, because I have dealt in many of the matters of income scaping assessment. So I thought to discuss and share my experience with everybody. So reassessment provision is there in the statute since the British era. When the old British regime law was there, Income Tax Act 1922, Section 34 was there as 147 was 34. Then 1961, a new act was passed, lot of changes. First time during the COVID period, certain major changes happened in reassessment provision. You know that there is a judgment called Ki Gyan Drive Short. Old law, Ki Gyan Drive Short given by Honorable Supreme Court, wherein Honorable Supreme Court has categorically given the SOP of how handling the reassessment provisions. So notice received, reason, file your ITR, request for a reason to believe. They'll give you a copy of reason to believe. You file a detailed objection. They'll have to pass a detailed objection disposal order. Then at that stage, you need to decide whether it's a case of writ or not. In case if you have decided not to go in a writ, there's no error, then the proceeding starts and then they pass an order. That was given in Ki Gyan Drive Short. But what happened? Assessing officer follows the statute, Income Tax Act. They don't follow what is there in the judgment of Supreme Court. So there are a lot of things, a lot of addition, a lot of litigations going. So for the first time, a new law came into picture effective from 1st April 2021. That was the time when COVID was going. So as you remember, as you know, the time limitation earlier was 4 years and 6 years. 4, 6 and 16. 3 time limitation was given in the old law. Old law means reassessment law till 31st March 2021. 4 years where your income chargeable is less than 1 lakh, 6 years more than 1 lakh, and 16 years in case of foreign assets. And this 16 years was inserted White Finance Act 2012. But 2015, a black money law came into picture, undisclosed foreign income assets. So though the 16 was not removed from the statute, but that become part of that act now. So later on, effective from 1st April 2021, the government has completely changed the complete provisions of the reassessment. So instead of 4 and 6, the law has been changed to 3 and 10. Instead of 1 lakh threshold, the law changed from less than 50 lakh, more than 50 lakh. So first amendment is Finance Act 2021, wherein they only talk about assets, only assets. But interestingly, 149, there was a limitation which was inserted that those cases at the time when this law is applicable, new law is applicable, those old assessment year which is pending has to go with the same time limitation which is there in the old law. And new law is effective from prospectively. That means 1st April 2021, if the new law is coming, so 10 years concept starts from 1st April 2021 onwards only, not earlier. So if I talk about assessment year 16-17, if 16-17 is expiring on 6 years means 31st March 22, so 16-17 expired on 31st March 22 only. Just because that 31st March 22 is coming into the new law provision, that doesn't mean that the officer gets the power to extend it for 10 years. Now, as rightly mentioned by Bharti initially, there was a lot of litigation happened in this case. So what was the goof up happened? Goof up happened was the officer was not aware. The law changes because of COVID. Everybody was working from home. So effective from 1st April, they issued a notice. 148 notice reach everybody's place or a desktop or a notices on in April 2021 and onwards. Especially the threshold time is 1st April 21 till 30th June 21. This was a litigation. This happened pan-India, Delhi High Court, Allahabad High Court, many high courts. I being little fortunate with God grace that I handled this type of litigation in 20 high court. The first judgment which we have taken in favor of this issue was by Honorable Allahabad High Court, when I was also a part of that batch, handling the lead matter. So the Honorable Court has categorically informed that there was a no saving clause. So as soon as you come into the time duration of the new law, automatically you need to comply with the procedures of the new law. So instead of issuing 148 notice, you're supposed to issue 148A notice. So what happened in the new law? Instead of directly giving 148 notice, the new law says you please issue 148A, which is called prior issuing a notice, 148. You issue 148A, then you give them a show cause with all the materials you have. Let them respond with all their replies, all the materials they have, and then we'll pass an order. That order we'll pass along with 148 notice. So what happened? Till 31st March 21, we are requesting for a reason to believe, filing objection and taking an objection disposal after issue 148 notice. 1st April 2021 done what? Effective from 1st April, these all things is happening prior to issue of 148 notice. So if you believe that 148A3 order is wrong, you challenge it before jurisdictional high court. But there are a lot of amendments happen. So the matter, we won those matters before high court. The matter travels to Supreme Court. For the first time in tax jurisprudence, Honorable Supreme Court invoked Article 142, which says that Supreme Court has a power, Honorable Supreme Court has a power to give any directions. And they have actually remanded back to the officer by saying that consider those 148 notice as a show cause, and they have given a time limitation. So that becomes another second round of litigation of those cases. So those second round of litigation finally got settled before Honorable 3 judges bench of the Honorable Supreme Court in the case of Rajiv Bansal, which was pronounced in October 2024. These were the background of the reassessment changes. So there was no separate chapter of reassessment effective 1st April 2024. They have merged search matters also into 148 only. So they have removed 148, 153A, B, C, everything. But this block assessment concept, again, they have introduced a separate chapter effective from Finance Number 2 Act 2024, effective from 1st September 2024. So on 1st September 2024, they have reduced the time limitation of 10 years, 3 and 10 years, and make it to 3 and 5 years. Now, the new sections, one very important thing in this new litigation is there is no concept called reason to believe. Now, what is important is information. What information, what material you have. It is important for an officer to give you those information and material at the time of show cause itself, so that you can give a detailed reply, and you have a full right to ask and seek all the materials, whether that material is directly hitting you or is it a suspicion. So I believe I'm audible to everybody.
Yes, Divyanshu ji,
Yes, sir.
audible.
Yes, sir.
Okay. So this is very important for everybody. Income escaping assessment chapter. So 279 is the new section parallel to section 147 of the 1961 Act. What constitutes information? Risk management strategy of CBDT, audit objection by Comptroller and Auditor General, information which they have received under double taxation avoidance agreement, any faceless information scheme, tribunal, court order, survey findings, or approving panel direction. Approving panel direction is the same which we have discussed in general anti-avoidance rule concept, GAR. Now, one thing, AO can assess any issue that escapes assessment and comes to notice during proceeding. As you remember that in the old law, it was there. In case if they issue you a reason to believe on reason X, but during the proceeding, they found Y and Z also. They can very well take those Y, Z and can pass an order. There is no need of fresh 148 notice in those cases. This is there in this provision also. So they have almost intact many of the provisions, but they have streamlined a lot of things which is creating a gap or there's a lot of differences in the understanding. They have tried to reduce those gaps and try to make it more clearer in this new law. The new section of notice is 280. Notice for escaped assessment, which we all know, a favorite section 148 of the 1961 Act. So my only request to everybody, please, whatever information or notice you receive, please see the time limitations, please see the timelines, whether the limitation clause, everything, please ensure, because if you are responding, if you are filing a submission, your legal submission, your legal ground should be there in those submissions. Now, what is the prerequisites? AO must have information suggesting income escaped assessments. No notice without information. Number one. No notice without information. Prior approval is mandatory. Specified authority approval mandatory. If information received under section 260, approving panel directions or court tribunal order. Prior approval is mandatory. As you are aware, in the current law also, assessee must respond within period specified in notice, not exceeding 3 months from the end of the month of issue. And the return status is return filed after expiry of notice period is not deemed a return under section 263. So time limitation they give you, which was amended from 1 month to 3 month, White Finance Act 2023. So it's still there in the new law. So this is a pre-notice procedure which came into picture effective from 1st April 2021. The new section is 281. You issue show cause. Along with show cause, give all detail, material, information, everything. Give assessee time. They'll file a reply. And then after the reply, considering the reply, you pass an order. 281 procedure is not required when AO has received information under section 260, which is a faceless scheme, or approving panel direction, which is under GAR, or court or tribunal findings. Exactly, this mirrors the same provision which is there in 148AX provisions and exceptions. So this is the new limitation. Again, based on the new time limitation, we are back to 31st March 2021. Earlier also there was a time limitation of 4 years and 6 years. Now again the time limitation of 4 years and 6 years is back. So reassessment time is, in a normal cases, less than or equal to 50 lakh, 4 years, 3 months from end of relevant tax year. In case of normal cases, less than equal to 50 lakh. In case it is greater than 50 lakh, up to 6 years, 3 months of escaped income. This is the time limitation. Show cause time is 4 years from the end of the relevant tax year, normal cases, and extended is 6 years. Now there you see the difference. As on date, the law says 3 years and 5 years. From 5, they have extended to 6 years, and from 3, they have extended to 4 years. One very important point which has been added in the new Income Tax Act is the cooling off period. For the first time, they've introduced a cooling period that both notices cannot be issued within 1 year from end of any tax year. As soon as you file your return, within 1 year from the end of any tax year, the officer cannot issue you notice, either under normal limit or either under extended limit. This was the cooling off period given in the new Income Tax Act 2025, which is not there in the 1961 Act. So now important alert. Please keep in mind this Why 3 months? Because obviously, after notice, after issuing, they wanted a 3 months time for a show cause. So 4-year 3 months and 6-year 3 months is a new time limitation effective from 1st April 2026 and onwards. 50 lakh threshold for extended limitation is a critical limitation. Please see, do not rely blindly on what officer is saying. Check whether the income statement assessment is 50 lakh or less. Sometimes it happens that your understanding or your calculation says 25, 30, 35, 40 lakhs. Officer says 50 and above. The idea was they just wanted to extend it the time limitation. So you need to cross check particularly whether your case is less than 50 lakh case or 50 lakh case. And make sure to ensure a proper documentation of income quantum is robust, or keep all documents, maintain every documents with you, because these are the areas where the litigations happen. We are fighting on reassessment provision. Out of 10 cases, I believe, if I example 10 cases, 4 cases or 5 cases on time limitation only.
Hello, sir. Sir, I have a little bit doubt about the cooling period. Earlier, we used to calculate time limits from the end of the relevant assessment year. Now, the concept of assessment year has gone away, and the tax is equal to previous year. So, basically, assessment year was the year in which we file the return of income. So even then also the assessing officer has the power to issue notice under section 148 from the end of the relevant assessment year. So cooling period to kind of a set off ही एक तरह से
I'll tell you, Bharti, what happened, because a lot of litigations going on wherein these officers are, instead of your scrutiny time limitation is there, but instead of scrutiny, they are pushing and they are sending a notice under reassessment.
Okay.
So the idea, I'll tell you, because reassessment law is not a simple law. Scrutiny, any cases you can open in scrutiny, certain parameters are there. So the idea of cooling off period is that instead of taking this position of reassessment, if the officer feels that this is a fit case, try and explore the ways of scrutiny instead of coming to the reassessment. That's the idea. Because a lot of cases wherein the officer has actually invoked 148 without going into the scrutiny proceeding, because they have some information material.
Yes.
So again, repeating, sir, this income scaping assessment is very important, because every day we are dealing income scaping assessment, third party information, a lot of things are there. So we need to be very particular about reassessment, and there's a lot of changes in reassessment provisions. Till 31st March 2021, X, between 1st April 2021 to 31st March 2022 is Y. We only talk about assets. Now, other than assets, expenditure concepts comes into picture, White Finance Act 2022. So expenditure also added along with assets, and entries also, because so whether it is a debit entry or credit entry also comes into picture, which is effective from 22-23. Finance Act 2023 has extended the time limitation from 1 month to 3 months in filing your returns. Some again amendments are done. And then major changes happened in Finance Number 2 Act 2024. So till 31st March 21, separate chapter on search, separate on non-search cases. From 1st April 2021 till 31st August 2024, search merged into 148. Again, from 1st September 2024, again, they have a separate chapter on block assessments, but that is applicable for those cases wherein the search under 132 is happening on 1st September 2024 and onwards. So there are a lot of amendments coming in the reassessment law. It is equally important to have a tabular format and see what amendment is coming in which, because I believe everybody is handling a day-to-day lot of litigations. So very important to see the fine tune when search is part of merged 148. If till 31st March 2021 search happened under old law 153 ABC, if 1st April 2021 till 31st August 2021 search happened part of 148, if 1st September 2024 and onwards, then you have a separate block assessment chapter. But if condition is search must be on those dates. And we are discussing about non-search matters only. So there is nothing called 148A in case of search. In case of search, we'll get 148 notice. No pre-show cause concept. If you understand reassessment law, you can quickly trigger, you can quickly identify where is a gap coming in the reassessment. Every notice officer sends, there are a lot of gaps in that notice. There's a very, very good case in drafting your reply, and your submission to show cause is very critical. You need to take all your legal defenses in those. Recently, in one of the cases, when we have contested before one of the jurisdictional high court, so what happened? I'll explain. Rajiv Bansal judgment is a very good judgment. I would suggest everybody to read that judgment. This was pronounced on October 2024, and 3 judges bench of the Honorable Supreme Court, wherein Honorable Supreme Court has categorically informed that for earlier assessment years, the old law of 6 years is applicable, not the new time limitation. So if your assessment year 18-19, 6 years is expiring on 31st March 24 as per old law. Even in you come into the new law regime, that period expires on 31st March 2024. That was the judgment of Rajiv Bansal. And my case was on the similar pattern, wherein we have contested this matter before Honorable High Court in a writ jurisdiction. But the chartered accountant called me and asked me that these is the issues coming. So I've categorically requested him to please add a para in your legal submission before the officer itself that this is an issue of limitation. And he has added those paras, and officer has passed a detailed final order without demolishing the argument of those paras. And that was the reason that the Honorable Court has intervened in a writ jurisdiction, though being it's a final order, because that the legal angle and the limitation part has not been addressed by the officer, and we have won that case following the Rajiv Bansal judgment. Everything, whatever document you get from the department, please read line by line, see the date, see the assessment year, see the time limitation, see whether it is signed or not, see whether the officer is jurisdictional officer or not, whether it has sanctioning authority or not. If you find anything missing, give detail in your reply. Your reply is a very strategic document. If you miss anything in your reply, maybe you lose a lot of strategic part later on in the litigation of those cases. So your reply, which is the assessee reply, you see it as a very important strategic document. I always see that reply as a strategic document. And I would suggest if you wanted to build a litigation case in those areas, always consult your lawyer also, what strategic points we should incorporate in that reply. Reassessment, because I think 10 out of 10 cases, 7 cases of reassessment case only. So 153 time limits for completion of assessments. The new section is 286, uniform 1 year limit from trigger date for most proceedings, a regular assessment year 1 year, end of financial year succeeding relevant tax year, assessment on updated returns, end of financial year in which updated return filed 1 year, reassessment, end of financial year in which section 280 notice served 1 year. Notice served on 31st March, next year by 31st March, they have to pass an order. That is the reason. And you have to be very, very quick, very, very quick. And this reassessment means they issue you a notice. Fresh assessment after appeal and revision, 1 year. TP reference, you get additional 12 months time limitation. Now, what we exclude from limitation period? This is important. Whenever you challenge any order before Honorable Jurisdictional High Court, when the court gives you a stay, that period from the date of starting of a stay till the time they passes an order in your favor or they reject an order, that complete period get excluded from the time limitation which the assessing officer have to pass an order. So court stay, any court stay is excluded from computing time limit for assessment completion. Special audit direction, from date of direction to last date for furnishing audit report, excluded, but the time limitation maximum is 6 months, excluded. Valuation officer reference, from the date of reference to date of receipt of valuation officer's report, excluded. This is important if you're dealing with international tax matters. DTAA information request from date of first reference for exchange of information to date of last receipt, or 1 year, whichever is less. So in case if they take time, then see 1 year as a time limitation, it is excluded. GAR, general anti-avoidance rules or advanced ruling, if you are dealing with these matters, period from reference to approving panel board for advanced ruling to receipt of directions, excluded. Now one thing, after excluding those period, even if your time duration left is less than 60 days, obviously So the law is designed in such a manner so that they'll extend it to for another 60 days so that the assessing officer gets substantial time to pass a detailed reason order, not in a hurry. These are the excluded time limitation. Your favorite tool, but I always sees 154 as a very strategic section for us as a chartered accountant. Now, new point is 287. Always sees as a strategic. Any mistake apparent from record, but please ensure no legal interpretation issues. Any mistake apparent from record. File a rectification mistake application. Application by assessee as soon as you file. Now, what is the time limitation? As soon as you file an application, law says within 6 months from end of the month of receipt. As soon as you file an application, within 6 months from the end of the month of the receipt, they're supposed to dispose of the application. Now, question comes. A lot of my participants ask me, Divyanshu, they then generally don't pass an order. Very good. So please give them a reminders, 2-3 reminders in case in spite of that they are not passing an order. Only option is please file a writ petition before Honorable Jurisdiction High Court, writ of mandamus requesting for a direction from the Honorable High Court to the officer to pass it, to dispose of the application. This is the only way. There's a lot of litigation going pan-India wherein people are filing a writ petition just because they wanted to seek a direction from the Honorable Court to the officer to pass an order, whatever be the order is. But time limitation given in law is 6 months. Now, total no amendment after 4 years from end of financial in which order was passed. So deadline, final deadline is 4 years. Then no amendment they'll do. Anything which they wanted to enhance, sometimes they suo motu do rectification. If they are enhancing anything, obviously it is important. Violation of principle of natural justice. Give me a prior notice and hearing, which is mandatory. Then only you have a right to enhance something. Now, what is the strategy? In case if you find something, a 143(1) intimation is also an appealable order. You find that you wanted to file an appeal. Best course of action is file a rectification application. Obviously, appeal has a time limitation and file an appeal also. In case if the officer gives you a positive order 154 that yes, there is an error, then best course of action is during the time of hearing you withdraw those grounds before the first appeal. These were the grounds which you have taken before you, considering my pending 154 application pending because now I have received a positive order. So hence I'm withdrawing those grounds. This is the best way because for filing an appeal you have a time limitation. Chapter 16, Part B, Block Assessment. We have discussed about search cases. Now comes the non-search cases. Now comes search cases. Section 292 to 301, which is parallel to 158 BH to 158 BA to BH of 1961 Act. What is a block period? 6 preceding tax years plus period from 1st April of such year to date of execution of last authorization. This is a block period. What is abatement? All pending assessments, reassessment proceedings for years in block period abate on date of such initiation. Whatever the assessment reassessment proceeding is pending in a block period can become abated. Tax rate, total undisclosed income of a block period taxed at a rate specified in section 192, irrespective of year to which income relates, and current year. Income of the year in which last authorization executed, other than undisclosed income, assessed separately under normal provisions. What is undisclosed income? Everywhere, every day we read the same thing. What is undisclosed income? Includes money, bullion, jewelry, virtual digital assets, or other valuable articles. Expenditure income based on entries in books not disclosed for tax purposes. Any expense, exemption, deduction, or allowance claimed but found incorrect. These all included under the definition of undisclosed income. What we exclude income already assessed declared before search. So if you have already, your your assessment has already been concluded, or you have already declared your return or anything before search date, income recorded in books in normal course and income, these are excluded from the definition of undisclosed income. What is the procedure? Notice issued. AO issues notice. Before that, prior approval, additional commissioner, joint commissioner required. Then you file your return of undisclosed income within 60 days. Then the AO determines total undisclosed income and block assessment. And then assessment order. AO passes order and determines tax payable. This is the process. No revised return permitted in block assessments. Another thing, we have already discussed the DRP, Dispute Resolution Panel. DRP provision do not apply to block assessment orders. Time limitation is 12 months from end of the quarter in which last authorization executed. What be the situation wherein the undisclosed income is of other person? Section is section 295. AO satisfied that undisclosed income belongs to a person other than the search person. Then they handed over the material to officer having jurisdiction over other person. Now, what is a block period for other person? Same as specified for the search person. If multiple search persons are relevant, block period of one ending later applies. Time limit, 12 months from end of the quarter in which notice under section 294 was issued to the other person. Now, what is an interest and penalty in block assessments? Covered with section 297 and 298. Now, parallel section is 158 BF and 158 BFA of 1961 Act. No routine interest penalty. So, all interest and penalty shall not be levied on undisclosed income assessed for block period. They have a special interest and penalty provision under section 298. If return not filed, 1.5% per month on tax on undisclosed income. Penalty is 50% of tax on undisclosed income determined by AO. And penalty waived if return filed, tax paid, evidence furnished, and no appeal on return income. Penalty waived. So we have discussed about assessment process, non-search cases, search cases. Now, next threshold for us for the today's session is appeals. It is covered under chapter 18, part A. This is a structure of appeal, section 356 to 374 in the new Income Tax Act. Section is 246 and 269 of the current act. Now, level 1 is joint commissioner appeal, order under section 246. Level 2 is commissioner appeals, order under section 246A. Level 3 is appellate tribunal. Level 4 is high court, but high court, I'm again repeating, appellate tribunal is a last fact finding court, a quasi-judicial court, last fact finding. So you see ITAT as a Supreme Court of factual matters only. Because as soon as you go to high court only talks about substantial question of law. Whether there is any substantial question of law coming out of ITAT order or not, which you have challenged. If yes, then they'll admit and frame a question law. If no, they'll reject it. And against high court, the top court is the final authority is the Honorable Supreme Court, level 5. So 2025 Act introduces the Joint Commissioner Appeal as a new first level appellate authority, which is Finance Act 25, a significant structural change from the 1961 Act, which had only Commissioner Appeal as a first level. So appeals to Joint Commissioner Appeal, which is good, and CIT Appeal, section 356 and 360. Joint Commissioner Appeal comes under 356, Commissioner Appeals comes under 357. Orders under section 246 equivalent are appealable orders. All the powers they have, they can confirm, reduce, enhance, annual assessment, and also set aside for fresh assessment. Commission appeal, appealable orders are 246A, same powers as Joint Commissioner Appeal, plus power to consider matters not raised by assessee. They can also, now this is important, plus power to consider matters not raised by assessee. this is critical from us as a chartered accountant perspective. We have to design a reply, structure a reply very strategically. So if certain things which we are not raising, the commissioner appeal can also take those matters. So here you have to work on a strategy for your client cases. Because any document which you file before commissioner appeal, it is very difficult to undo those things at the next level. If you ask my opinion, I believe not writing anything is a better option comparing to writing something which we cannot erase now later on. What are the form, limitations and procedure for first appeals? It is given in section 358 to 360. Parallel sections are 249 to 251 of 1961 Act. Appeal must be in a prescribed form, as we know, verified in prescribed manner, filed with limitation period, within limitation period, condonation of delay available on sufficient caution. So in case if there is a delay, drafting a condonation of delay application is an art. You have to draft it in such a strategic manner so that the honorable first appeal can condone your delay and hear your matter on a merit. That is important if there is any delay coming. Procedure in appeal, Joint Commissioner appeals, CIT appeals may fix day and place of hearing, adjourn and make further inquiry, may refer to AO for report, and also must give a reasonable opportunity of being heard. Power. Confirm, reduce, enhance. This enhance is tricky. So they have an enhancement power. I always say is that tribunal doesn't enhance, they can set aside. But first appeal has an enhancement power. So whatever you are filing, you have to be very clear what you are filing, what prayer you have and what relief you wanted from them. Filing unnecessary documents or writing unnecessary things will only attract enhancement provision. Or annual assessments may set aside and refer back to AO. Enhancement requires same thing, natural justice, anything they wanted to enhance, they have to give you a prior notice. Very important forum. If we talk about faceless, so now first appeal is also faceless, then leaving apart some matters like international tax, TP, GAR matters and all these things. Appellate tribunal, if you miss your bus in the first appeal, this is the last fact-finding authority. If you think that some grounds are wrong, please take additional ground, file an additional ground application before honorable tribunal. I have appeared in a number of cases before appellate tribunal. Unfortunately, since my articleship days, I appeared with my principal at those days also before the forum. This is the mother of all tribunal. First tribunal formed in India way back. You believe that some document you have missed, file an additional evidence application. This is important forum, very important forum. File a proper paper book, proper structured index paper book, whatever document you have filed at the lower authority, file it before tribunal, file a detailed appeal set, file a proper synopsis before honorable tribunal, your arguments, your propositions, file a proper case law compilation, which cases you are relying, what para you are relying. And in case department has relied on some judgments, you distinguish those judgments in your analysis before tribunal. And obviously, revenue can also file an appeal before ITAT. So in the same way, if you after all these things, so ITAT has single bench and division benches. Small matters goes to single bench, and bigger threshold matters goes to division benches of 2 members and above. And yes, obviously, if though both the honorable bench members have a different view, then obviously they'll refer it to the third member also. These days, a lot of incidents wherein the third member judgment orders are coming also from the Honorable Tribunal Pan India. So so after passing an order, first stage is now one very critical point. In the statute for stay, filing an appeal doesn't give you an automatic stay. So you need to move a parallel. As soon as you file an appeal before first appeal, please move a stay petition before assessing officer requesting for a praying for staying the proceeding, and obviously the threshold amount you are supposed to deposit, get the matter stayed, in case otherwise they'll attach your bank account. So in case if they are not complying, then move to the senior officer, principal commissioner of the officer. In case not, then move an application before first appeal. Before tribunal also, you're supposed to not only file an appeal, you're supposed to file a stay petition also for getting your matter stayed if the demand is there. And they'll hear the stay petition and then they'll dispose it off. Current law says 20% you need to deposit for getting a stay order until your matter is a covered matter. Earlier years, you already have a decision from the Honorable Tribunal in your favor. I'm again repeating, friends, Tribunal, Honorable Appellate Tribunal is a very, very important forum after first appeal. Very, very important forum. Because here you are actually representing a matter one-to-one before the Honorable Court. So ensure all factual grounds are raised before ITAT, because High Court only entertains substantial question of law. High Court will not go into facts. In case if you get a wrong judgment or maybe a judgment against you from Honorable Tribunal, only thing which you have to show before High Court is to show that the order is perverse. Order is not technically correct. This is the only option you have. And if they find it, they'll remand it back to the tribunal. Otherwise, no, they'll not interfere until there is not a legal point involved. Now comes after tribunal appeals to High Court. 365 and 366. 365, appeal to High Court. Appeal lies against ITAT order on substantial question of law, as I have already mentioned. High Court formulates the question and decides the appeal on that question. Assessee or revenue may appeal. So as soon as you file an appeal, the matter gets listed for the first time. You argue your matter. If the court feels that this matter deserves admission, the court will issue a notice. The court will invite the other party to argue this matter. And if they find that this matter deserves an admission, obviously the other person will oppose. If they find this matter requires an admission, they'll admit those appeals and frame a question law. And they'll list it for some other time for final arguments. Or else they'll dismiss it at the outright first stage itself. Against the High Court order, you go to Supreme Court. Appeal lies against High Court judgment on a substantial question law certified by High Court as fit for appeal to Supreme Court. But 90% cases these days, people, because there is no appeal provision in statute, so people file SLP before Honorable Supreme Court under Article 136 of the Constitution. The Honorable Supreme Court decides whether to grant leave or not. In case of the grant leave, then they convert that SLP into civil appeal. This is a very important provision. Chapter 18, Part B. Avoiding repetitive appeals. Now, what happened when certain question in your own client case, certain questions are already pending before Honorable High Court or a Supreme Court. So if assessee claims an identical question law is pending before Honorable High Court or a Supreme Court, and you don't want AO to pass every year order, back-to-back same issue, because obviously until as a matter not gets settled at the Supreme Court level, the assessing officer wanted to keep the issue alive. And for keeping the issue alive, what the assessing officer do? They pass an order following the same pattern which they have followed in the earlier years orders. And you wanted to stop those things. So there is a provision called 375, which says if assessee claims an identical question law is pending before High Court or Supreme Court, AO may stay assessment proceedings pending decision. You stay my assessment proceeding pending decisions. Assessee must furnish undertaking to be bound by High Court, Supreme Court decisions. You give an undertaking that if court gives a decision against me, I'll comply and I'll pay all the taxes. And then AO passes order within 60 days of receiving declaration. What the order they pass that they are not passing further order on this particular issue. They wanted to keep it alive. They wanted to keep it intact. They'll not pass any order. Reason? Following your giving a direction of your undertaking and following that this particular issue is pending before Honorable High Court or a Supreme Court. Please remember, many of the chartered accountants probably, when I have met, they are not aware about this provision. There is a provision if you wanted to stop the clock. So you have 10 assessment years, 2 assessment years pending at the top level. You want to stop the clock in 8 assessment year, you can move an application before the jurisdictional officer requesting about this, attaching the copy of those orders if you want. Or else another option is let them pass an order, you follow the same orders, you go to the top level and get your matters tagged with those years, with those assessment years. Let all assessment years comes together. Now another section, please again repeating, based on my experience, I've met many practicing CAs who are not aware about this provision. So please see, in case if you're aware, it is very good. But if you're not aware, this is a very important provision there in the statute. And this is already there in the existing statute under 158A and 158AB of the Act. Section 376, revenues identical questions. So where revenue has an identical, revenue means department, has an identical question pending before High Court or a Supreme Court, learned PCIT and learned CIT may direct AO to apply the same procedure. So they'll say that you follow the same procedure because the issue involved is pending before Honorable Supreme Court. Avoiding multiplicity of appeal on the same legal issue across multiple SCs. So 375 talks about your application, your claim. 376 talks about revenues identical question. Now, what is the strategy? Please use 375 proactively when a favorable High Court or a Supreme Court decision is pending on a recurring legal issue affecting your client. You can use it. This is important as this is a strategic. That is a reason of taking, because many of them, they don't take these sections, but the idea of taking those sections, because I think these sections are very important for you. Now, every day, you see 263 and 264. This comes under Chapter 18, Part C of the New Income Tax Act 2025. The new section is 377 and 378. Revision prejudicial to revenue. Learned PCIT and learned CIT may revise any order passed by an officer if it is erroneous and prejudicial to the interest of revenues. Same provision intact. Must give assessee an opportunity to being heard. Order must be passed within 2 years from the end of the financial year in which order sought to be revised was passed. Every day I find so many judgments, so many appeals filed before Honorable Tribunal challenging 263 order. 263 conditions that this is the show cause, natural justice has been not complied. They have not given me a proper time of show cause to file my reply. This is a case of 148. This is not a case of 263. Now this comes under 377. One section which is given in the Act is 264. I'm not sure how many of my learned friends has actually used those sections, but we have handled so many cases wherein we have challenged 264 order before Honorable Jurisdictional High Court, wherein you are, instead of filing an appeal, you are going directly to the Principal Commissioner and saying a revision order. Because as soon as you go to 264, you have no appeal remedy. You have no first appeal, you have no tribunal, nothing. Only option available for you is to go in a writ jurisdiction before Honorable High Court against that 264 order. PCIT, learned PCIT and learned CIT may revise any other order on application by SSE. Any other order, not order which is prejudicial to, on application by SSE or suo motu. Either you move an application or they feel that this is not correct. Application must be filed within 1 year from the date of the order. If you're not satisfied with an assessing officer order, please, but 1 year means you're not filing an appeal. That means you have left an option of filing an appeal. So that is a strategic call. 264, you are relying on a decision of a PCIT without taking the route of first appeal and a second appeal. That's a risky proposition, but that is a strategic call which you have to take for your client, because obviously every decision you take either goes in favor of you, either goes against you. So that is the reason I'm saying it's a strategic decision which you have to take. PCIT and CIT must pass order within 1 year from the end of the financial year in which application received. This comes under 378, 263, 264. Now, what is the key litigation risk? Now, these things are practical experience which I have prepared. What are the key litigation risk you have? Revenue revision risk, 377. AO failure to make inquiries, erroneous and prejudicial order. So now what happened? The CIT gives a direction to the officer to pass an order in this way. And then the officer, what the officer will do? The officer will pass an order. And there is a high possibility that order is erroneous and prejudicial order. Learned PCIT and learned CIT can set aside and direct fresh assessment, suo motu, de novo. No, now one thing which is very important, there is no appeal against 377 revision order. Two years from end of the financial year of original order. Now, same thing for the assessee revision risk. Available only for orders not appealable or where appeal not filed. 1 year means you're not filing an appeal. As soon as you file an appeal, you cannot move 378. PCIT, CIT may enhance, modify, or cancel assessment. But wherever the enhancement occurs, they give you a notice and hearing. Revision not available if appeal is pending or decided. Now, another very important route, appeal route is Chapter 18, Part D, which is Dispute Resolution Committee. Current law is 245 MA. Purpose, provide an alternative dispute resolution mechanism for small and medium taxpayers and avoiding prolonged litigation through a committee-based settlement process. What is an eligibility? Available in certain specified cases as notified. Assessee applies to a dispute resolution committee constituted by CBDT for resolution of dispute. What is an outcome? DRC order is binding. Provides immunity from penalty and prosecution respect of income covered by the order, a significant benefit over conventional appeals. So you have a immunity from penalty and prosecution, but obviously the quantum and the demand interest is there. So this is a dispute resolution committee. The next and the last route is Board for Advanced Ruling, Section 380 and 89, which is parallel to Section 245N and 245W of 1961 Act. You file an application under Section 383. Board decides within prescribed time whether to admit that application or reject. Board issues its advanced ruling. Ruling binds applicant and revenue, not to everybody. Board ruling binds applicant and revenue, and appeal is open against that ruling. So board for advanced ruling replaces the authority. Earlier, you remember that there's a concept called authority for advanced ruling. So board for advanced ruling replaces the authority for advanced ruling. Vacancies do not invalidate proceedings. Appellate authority cannot proceed in cases where ruling application is pending, ruling void if obtained by fraud or misrepresentation. So officer, first appeal, joint commissioner appeal, tribunal, high court, Supreme Court, revision powers, then comes dispute resolution committee, board. Sir, this is the advanced ruling key provisions, section 380 to 389. I'm just mapping to 1961 Act. This is to 2025 sections, and this is 1961 parallel sections. So this is quick section to section mapping assessments. These are given in my last presentation slide, so it would be easier for everybody to see in a flow wise. This is a quick referencer. So inquiry before assessment, valuation officer reference, assessment, best judgment, joint commissioner direction, faceless, reference to PCIT, DRP, everything is given in an index format. Appealable order before joint commissioner appeal, appealable order before CIT appeal, form of appeal and limitation, procedure in appeal, powers of joint commissioner appeal and CIT appeal, appellate tribunal, appeals to ITAT, orders of ITAT, appeals to High Court, appeals to Supreme Court, identical questions pending before High Court or Supreme Court, revision prejudicial to revenue, revision of other orders, dispute resolution committee. So please, after this slide, please just run through later on when you get these slides, just refer to these slides and you will get that reference section wise also. Though in the same slide itself, we have already given a parallel section which is there in the existing law. Joint Commissioner appeal, updated return window extended to 48 months, faceless assessment fully codified in statute, virtual digital assets explicitly included in undisclosed income definition. So because obviously we are virtual digital assets these days is a topic for discussion. So this has been exclusively included in undisclosed income definition. What we have retained from 1961 Act, best judgment assessment triggers and procedures, DRP for TP and non-resident cases, block assessment framework for such cases, revision powers of PCIT, CIT, ITAT, High Court, Supreme Court appeal hierarchy we are retaining. Now, if you see the slides. Show cause notice is normal. Top, you see the toolbar. This is the chart which we have prepared for you. Show cause notice 281 normal. Show cause notice 281 is normal means less than 50 lakh. 281 not normal means 50 lakh and above. Notice 280 normal. Notice 280 50 lakh and above. Block assessment 296. So block assessment is all search matters. Above 4 table is all non-search matters. The 50 lakh escaped income threshold determines whether the extended limitation applies. That is the reason if you see in my presentation slide, I have given a toolbox that you need to, as a CA, we need to see how much is the quantum coming. We cannot rely blindly on what the officer is saying. This is a critical battleground in reassessment litigation. Block assessment is a separate 12 months window from end of the quarter of last authorization, from not from end of the tax year. Now, updated returns window, because these days the Union of India is asking people to just see. They have given a good window of updated returns to you. What is an advisory? The extended 48-month window under this section is a powerful tool for voluntary compliance. Please advise clients to file updated returns early. The additional tax cost rises steeply after 24 months. Once a search, survey or prosecution is initiated, the window closes permanently for those years. So if you know your client says that, look, I have so much amount of cash, maybe 30 crores, 40 crores, 50 or jewelry, which is not disclosed. So if they feel disclosure is important, but that is a strategic call, which you have to have a discussion with your client, and based on that, you need to take a decision. And so you have to discuss whether you wanted to show it in your updated returns or take a different route. You need to see and strategize and give a right advice to your client. Certain checklist we have prepared may be helpful for you. CA compliance checklist. Monitor e-filing portal daily. I think that this is only possible when you delegate. If you have 10 juniors and everybody's handling X amount of clients, so at least prepare an SOP for a daily schedule. At least check once in a day if possible. If possible, I'm not saying it is possible, but if possible. All NFAC communications are electronic. Missed notices lead to ex-party orders. Register and verify client accounts on a designated portal. Respond within 30 days. Standard response window for adjustment under so-and-so is 30 days. Missing this triggers automatic adjustments and intimations. Document all submissions. My only suggestion is to take the print and put it in the file, hard copy file, because I have, in my practical experience in my litigations, I've seen those cases also wherein the officer, from the portal, they have deleted those documents from the portal. I have seen those things. So my only suggestion, whatever comes, please take the printout and put it in the file. Whosoever is handling the matter, whosoever junior is handling the matter. Maintain records of all electronic submissions to NFAC, timestamps, acknowledgement, and content. These are critical evidence in appeals. Please keep hard copy records. My only suggestion to everybody, because relying on a departmental portal is not correct technically. Track unit assignments. Cases may be assigned to assessments, verification, technical or review. Each has different function. Tailor responses accordingly. So please draft your responses based on the unit which has raised the query. Is it assessment? Because everybody has a different mindset. Search cases, CA action plan. Immediate preserve records. On search initiation, all pending assessments abate. Identify the block periods. That is the first important role you have. Identify the block period. Within 60 days, file block returns. File returns of undisclosed income within the notice period. No revised return permitted. Consider 30 days extension if audit pending for immediate preceding years. Compute undisclosed income carefully. Exclude income already assessed, declared in returns or recorded in books in normal course. Losses from pre-block period cannot be set off against undisclosed income. These are the strategic ways you have to design. It is easy to put. I'm just giving you a checklist points, but yes, every line is important. You have to see the documents, prepare your notes, have a good discussion and a conference with your client, and then prepare a strategy. How you wanted to move ahead. Because you have to see that litigation angle is also there. You want to file a case, how you wanted to take those cases at the top level. You have to strategize at the bottom level itself. Penalty mitigations. Pay tax on return undisclosed income. furnish evidence, and do not appeal return income. This avoids 50% penalty. Again, everything depends on case to case. No standard SOP for every client has its own facts. Every client needs a different, every matter needs a different strategy. So based on the strategy you have to apply. These are the certain points which I've given you. Now, for those learned participants who do DRP matters also, a slide for the strategy, for DRP strategy for transfer pricing in non-residents, when to use DRP. Mandatory consideration when TP officers order results in various prejudicial to assessee. Available to all non-residents and foreign companies. DRP can enhance, not just reduce variation. So enhancement is also there with DRP, just like CITP. So please, before going to DRP, evaluate going to DRP, make a comparative pro-cons analysis of DRP and CIT appeal, which is better. And then based on that strategic call, then you take a decision, which is better. Consider this risk before filing objections. Now, what are the key differences between DRP versus CIT?
Divyanshu ji, we have some questions also.
I am almost finished, but 2 minutes,
Okay.
3 slides more.
Okay. Perfect.
9 months. So what is the difference? DRP has a 9 months window for directions. AO completes within 1 month thereafter. So DRP is a fast track route, but 90% cases will not get any relief from DRP. So so we always advise client that see DRP as a fast track route of moving from officer to the honorable ITAT route. DRP direction is binding on AO, no discretion. So DRP cannot set aside proposed variation or direct further inquiry. Missing. After DRP, appeal lies directly to ITAT, not CIT appeal. So these are the strategic things which you need to keep in mind. Bharti ji, this is just a strategic slides. I think this is helpful for everybody going forward. So revision versus appeal, strategic choice. What is the path 1? Appeal to CIT appeal and Joint Commissioner appeal. Against assessment orders, time-bound tax must be paid. Path 2. Revision under PC section 378, where no appeal filed, PCIT, CIT can enhance 1 year time limit. Path 3, writ petition against section 377 revision orders, jurisdictional high court, no time bar. But obviously there is a time bar. It is always advisable to file it within a period of less than a year. Now, what is an advisory is revision under section 378 is not available if an appeal is pending or has been decided. So please choose the remedy carefully. Switching between the remedies can result in loss of limitations. Top. Bus 3 more slides. Just finish it about. Top 10 litigation risk triggers. Missing return due dates, as everybody knows this thing. Inoperative PAN that blocks TDS credit and refund. Missed NFEC notices. Ex parte faceless order possibility is high. Updated returns bars. Filing after such survey prosecution is void. So right time of filing is critical. 50 lakh threshold in reassessment. So it determines whether your case falls into 4-year time limitation or 6 years time limitation. So please document your income quantum meticulously. DRP enhancement risk. Yes, as I've already discussed. These are the time limitation comparison between 2025 Act and 1961 Act. Key takeaways for us. The 25 Act largely mirrors the 61 Act in substance. Section number changes, but the procedural framework is preserved. Extended 48-month updated return window and the new Joint Commissioner Appeal Forum offer additional compliance and dispute resolution options for clients. New risk, faceless assessment demands digital vigilance. Voluntary disclosure, virtual digital assets and undisclosed income escalating additional tax rates and the 50 lakh reassessment thresholds are new battlegrounds. And act now. Update. This is important because parallelly you will work on 2 things. So this is effective from 1st April 2026 and onwards. So for those years, you will get the new sections under Income Tax Act 2025. And for earlier years, you get Income Tax Act 1961. So it is equally important that your office must have those section references with you so that it is easy to understand. So this is all about the slides. I tried to cover everything. Yes.
Yes, yes. Bharti ji, please take up all the
Yes,
queries
yes, sir.
first.
So the first query is 31st July of a person having PGPP not required tax audit is extended to 31st August as per Finance Bill 2026. So they are just informing this is not just a query. Next query is whether updated ITR can be filed if original ITR is not processed under section intimation under section 143(1) of the IT Act is not received.
Whether updated returns can be filed if the original return has not been filed.
Original ITR is not processed under section 143(1) or ITR intimation is not received.
You can file.
Of
Yes.
course.
Yes.
Another query is can revised return be filed after processing of original return claim refund in revised return after budget 2026?
Can you repeat the question?
Can revised return be filed after processing of original return and claim refund in revised return after budget 2026? So, sir, once there is a case of refunds, I don't think updated return can be filed. There is a question that once the person has filed the original return, then he has subsequently filed the revised return with refund due. So, can he update his return after budget 2026? The query is this, like this.
Bharti ji, please send me this query. I'll respond on this.
Okay, sir. Then there is another query.
Yeah, the second question was he's asking for the revised return and not the updated return. It is can revised return be filed after processing of the original return and in revised return, then refund can be claimed. This after budget 2026. So
Yes,
in
yes, yes.
revised return, claiming or refund is not restricted
Correct.
Yes, yes.
because updated return is not asked.
Yes, yes, yes.
And Bharti ji, first query छूट गई है संदीप ठाकुर जी की, I guess. I'm not sure if it is
No, I
taken up.
have. This was just an intimation. He was just provided the information. This was not a query, ma'am.
No. He is asking query कि whether for 44 AD or ADA cases because question mark है last में.
Okay, 31st July of
Let us
person
take
having
that.
PGBP not required tax audit is extended to 31st August as per Finance Bill 2026. 44 AD, 44 ADA cases.
44 AD. Bharti ji, please send me this question also.
Okay, sir.
I'll respond by all the questions by today itself.
Okay, and then there is another query. A Section 8 company which was required to apply for renewal of exemption under Section 12A/80G by September 2024 missed the deadline and applied for condonation by September 2025. They have recently been asked for few documents by the department which have been submitted. Since there was a misunderstanding between only two directors, AGM was not held within due date and was recently conducted. IT return for financial year 24-25 was not furnished in time. Matter in between shareholders is being resolved now. Is there any solution for filing the ITR? I think they have complicated.
No problem. You send me this question, we'll reframe it.
It is not very much related to the topic also.
Yes.
We can send it.
I just, sir, since
Divyanshu bhai,
Yes, sir.
K changes in Income Tax Act 2025 versus 1961. Major changes, if any.
How are you?
Fine.
दर्शन हो गए जैन साहब, नमस्कार।
नमस्कार
सर, आप भी अपने इनपुट दे सकते हैं। यू आर ऑल्सो
अरे
एक्सपर्ट ऑन दिस।
मैं तो गुरुजी से ज्ञान लेने की इच्छा रख रहा
गुरु जी से
हूँ।
नहीं सर, आप भी इनपुट दे सकते हैं, कोई क्वेरी जो लग रहा हो आपको।
हाँ
जी,
कोई चेंजेस, मेजर चेंजेस
किसमें सर?
असेसमेंट, रीअसेसमेंट, अपील
एज
न्यू लॉ में
कंपेयर टू ओल्ड वर्सेस न्यू।
मेजर चेंजेस नहीं है। दे हैव केप्ट इट इंटैक्ट। वो टाइम लिमिटेशंस को वापस दे हैव गॉन इनटू 4 years and 6 years। नॉट देयर इज नॉट मच चेंजेस। उसको कोडिफाइड करके थोड़ा स्ट्रीमलाइन कर दिया है टेबुलर फॉर्मेट में।
ओके,
बिकॉज रीअसेसमेंट दे हैव ऑलरेडी स्ट्रीमलाइन ना, वो सारे प्रोविजंस तो वो चेंज कर ही चुके थे, उसको उन्होंने स्ट्रक्चर कर दिया इन अ वेरी सिंपलर मैनर,
टेबल मैनर।
सो व्हाट इज मोर इंपॉर्टेंट इज वी नीड टू रीड द सेक्शंस, वो सेक्शन। बट उसके लिए शायद टूल दिया है इनकम टैक्स की वेबसाइट पे, यू कैन कंपेयर इट विद द एग्जिस्टिंग सेक्शन। सो इनकम टैक्स ने आपको गवर्नमेंट की साइट पे टूल दे दिया कि आप नए एक्ट में 377 डालिए, यू विल गेट अ ओल्ड सेक्शन, और पैरेलली आपको दोनों पैरेलली सेक्शंस ओपन हो जाएगा, व्हिच इज इंपॉर्टेंट।
Okay.
So अभी we also don't remember this new act sections too much. So हमें old law देखना पड़ता है कि वो कौन सा section है.
Yes, yes, yes. Okay. Thank
Sir,
you.
जी भारती.
there is another query that
हाँ.
in case of an assessee, original return was filed declaring positive income. The assessee filed a revised return under section 139(5) declaring loss return. Income tax department is of the opinion that loss cannot be allowed to be carried forward. Please clarify the legal position, especially with reference to the judgment of Honorable Supreme Court in the case of Wipro Limited, dated 11th July 2022.
Why loss returns cannot be carried forward? Bharti, you send me this question also. I'll respond.
Okay.
Let me see the fine print of this Supreme Court judgment also, which he is referring.
Okay, sir. The next query is, haven't due date changed in the budget 2026 and updated return provision change in budget 2026 also?
Yes, that is applicable.
Key change in assessment, sir has already asked. Key change in assessment, reassessment, appeal in income tax 2025 in comparison with Income Tax Act 1961.
Not
think-
much
I think-
changes. Not
I
much
think ये
changes.
discuss हो गया already.
Yes,
CM
yes,
ने
yes,
कहा.
yes, yes, yes.
हाँ, right.
What will be the tax rate under section 192 of new
What will
income
be
tax?
the-
Obviously, tax rate.
Regarding tax rate, I have to check. I'm not into this rate percentage on a daily basis, but we'll respond. I'll respond on this also.
Okay, and then there is another
Bharti
query.
ji, my
Last
only
query.
request is whatever the questions you have now, because sometimes the questions we'll reframe those questions and give a response
Yes,
also.
yes,
So
yes, sir.
you share all those questions with me. We'll
Okay,
give a
sure,
response on all the questions.
Okay, sir. So can I tell you the last query or should I still do
Please,
the last
please,
one?
please.
Notice issued under section 148 stating that the department have information that assessee entered into an agreement to purchase a plot for rupees 95 lakh in cash, which is not correct. Whether we can call for the agreement from the department? Of course.
Yes, you can call everything. Now, this is important. I can now give a detailed discussion on this. So, department has to have a relevant material. Whatever document they are relying, it is mandatory under the reassessment law that you have a right to take those agreements, those documents from them, and they are supposed to provide you. And then only you have to file your detailed reply. So, whatever things they are relying, you have a full right to take those documents from the department. Please file your reply thoroughly, asking for all those papers.
Sir, I myself have a query, although it relates to the old provisions of
दिव्यांशु
income
भाई
tax.
एक
हाँ जी
148A के रिगार्डिंग है कि
बताइए।
इंफॉर्मेशन का मीनिंग क्या है
हम्म
कि एंटायर मटेरियल शुड बी प्रोवाइडेड टू असेसी.
यस
यस.
यस
अभी रिसेंटली दिल्ली हाई कोर्ट रिसेंटली कॉन्ट्रडिक्ट द ऑर्डर.
आप भेजना मुझे.
उन्होंने कहा इंफॉर्मेशन
मैं
प्रोवाइडेड
factually
का जो मीनिंग है 148
आप भेजिएगा.
क्लॉज 3 उसमें उन्होंने मेंशन किया है कि इंफॉर्मेशन का मतलब ओनली प्रोवाइडिंग द इंफॉर्मेशन.
नहीं, ये कंजर्वेटिव व्यू है.
हाँ.
आप ऑर्डर भेजना. अब वो कंजर्वेटिव व्यू है और आई थिंक ये दिल्ली हाई कोर्ट का है.
हाँ
3 से 4 महीने पहले का.
ना अभी रिसेंटली 2-3 days 4 days.
आप भेजना मुझे ऑर्डर. 100% उसका फैक्चुअली आई डिस्टिंग्विश इट. हो सकता है वो सर्च मैटर से रिलेटेड हो कहीं ना कहीं.
नो इंडिविजुअल ओनली इन इंडिविजुअल.
आप शेयर करना मुझे. आई डिस्टिंग्विश. अदरवाइज लॉ बहुत क्लियर है. द आइडिया ऑफ फ्रेमिंग दिस रीअसेसमेंट प्रोविजन ऑन बाय वाइट फाइनेंस एक्ट 2021 इज टू शेयर ऑल मटेरियल्स, ऑल इंफॉर्मेशन, एवरीथिंग टू द पर्सन
on the basis of Rajiv Bansal cases only.
Correct. So Rajiv Bansal categorically talks about material and information. Though later on the provision has been diluted in White Finance Act आपके 149 सेक्शन में, लेकिन ये वाला पार्ट डाइल्यूट नहीं हुआ कि आप इंफॉर्मेशन शेयर नहीं करेंगे, मटेरियल शेयर नहीं करेंगे.
हाँ, उसमें रिस्ट्रिक्ट उन्होंने व्यू यही लिया है कि एडवांस व्यू नहीं ले सकते क्योंकि असेसी इसे चीट कर सकता है. उन्होंने पैरा में लिखा हुआ है इस पे.
आप मुझे ऑर्डर शेयर करना. दैट इज इंपॉर्टेंट to see because then it's a jurisdictional high court decision ना. तो whenever we'll go we have to distinguish it also.
क्योंकि बेसिकली अभी भूटानी वाले ग्रुप वाले जो केसेस हो रहे थे तो मुझे लगा कि अब तो रिवर्स कॉन्सेप्ट हमारे लिए भी एप्लीकेबल हो गया.
नहीं आप ऑर्डर शेयर करना, हम लोग डिस्टिंग्विश करेंगे.
Okay.
Sir, so I was talking about some questions, sir. In case of own case, there was one case when the reason to believe was provided at the later stage of the assessment proceedings. Assessee filed the objection to the reason to believe.
You are asking reasons to believe. Reasons to
Yes.
believe means this is like prior to 31st March 21 case?
Yes. My
Okay.
query is related to the old provisions.
Okay.
So assessee filed the objections just 3 days before the time barred limitation date. And he also mentioned in the reply that you may also dispose of my objection in the assessment order itself. But the assessing officer did not pass the separate order disposing of the objection. Neither he discussed the objection in the assessment order. So what would be the course of action?
Has he
should
passed the order? Has he passed the order?
Assessment order he has passed, but not the order disposing of the objection.
It's okay. Good fit case. We need to see the case, but it's a fit case to file a writ. But obviously, we need to see the list of dates, how things moved. But it's because it is mandatory to file a. Oh, GCAN drive shaft is applicable. Objection disposal order is mandatory.
Disposing of the objection by the, even though assessee conceded before the AO that you may dispose of the objection in the assessment order, you don't need to pass a separate order.
That dilutes your case, but that not demolishes your argument.
Yes. Okay, sir. Thank you very much, sir. For
Avarti, one more query, Manish Joshi की वो ले लीजिए.
Okay.
Before closing.
Manish Joshi. Yes, sir. Why is it insisted upon to file the return in block cases within 60 days? Tax department can compute the tax on their own in such cases and issue the notice with the computed tax amount.
भारती जी आप क्वेरी भेजिए मुझे. I'll respond on all the queries.
Sure, sir.
सुमित जी आपको हम आप किस ग्रुप में आपको पर्सनल शेयर करना है all the queries reply?
हाँ मुझे दे दीजिएगा. मैं एक समरी बना के मैंने का लिंक शेयर किया हुआ है डेली न्यूज अलर्ट का, उसमें मैं
भारती जी आप ना सारा कॉपी पेस्ट कर दीजिएगा वर्ड डॉक्यूमेंट में, मुझे क्वेरी शेयर कर दीजिएगा.
Sure, sir. Definitely, sir. Thank you so much, sir, for this wonderful deliberation delivered with so much clarity and depth. You have covered each and every topic. The topic and subject was very vast, yet you have covered every topic comprehensively, yet with so simplicity that complex provisions can be understood easily. And sir, not only you have imparted knowledge, but also shared the professional tactics and the strategies to how to draft our submissions and how to present our case before the assessing officer. Your PPT was too much vast and so much informative. I would like you to share that PPT too with us, sir. And sir, this session could not have been presented in a better manner like you have done this. You have done a great job, sir. You have covered every topic with diligently. Thank you so much for this wonderful session, sir. And
thank you so much.
Thank you, Divyanshu ji. Thank you. CM Jain Sahab, you want to conclude by your remark? CM Jain? He is not there. So let me conclude, and thanks to Divyanshu bhai once again for your precious time and knowledge. Presentation will be shared to all participants through this CASA platform. And thanks for joining today's program. And tomorrow we are having one more important session on income, is on undisclosed income by CA Paras Dawarji. So join us tomorrow also in 6th day. And special thanks to Bharti ji for coordinating today event. So thank you everyone for joining the event. Thank you. Namaskar.
Thank you so much. Thank you.
Thank you.
Thank you so much ji. Thank you.